Here we have the Philadelphia SOX index. We're also going to be, and it's a weekly chart, we're going to be introducing, once again, we trade these bear and bull ETFs. This is a 3x bear that had just popped right back up to the highs off of this daily trend. 1 day, 2 days, 3 days, 4 days, and on the 5th day it makes the high during that cycle. And at the same time, over here in this chart, this is the bull that had made a great move. So here they are in here together. Here is the breakout on the bear. And when that bear, you're going long, but then the bull had the same amount of reversal. So being long and being short here at the same time is because I can permission you to sell short down. So you can get, when that move was working, this move was working, and you're getting paid twice. But now, when we do know what those elements look like on both bear and bull processes here, is the reversal trends, is that when the bear was breaking down, and you can short this up here at 100, that was going straight down, but we were making big time breakouts here off of the low end of the other direction, and that the 3x bear seemed to pay a good short, meaning when the bear falls you can make money, and when the bear goes up you can make money. And same thing here, when the bull is breaking out you're long, and you can short that bull down here too. But let's talk about what we need to talk about, as those relationships are what they are. Let's talk about the weekly relationship here, and let's take a look at seasonality. We were shorting these up here all year, and we have them live. Why? Because semiconductors and their business chain, they start to get weak during certain calendar month seasonality, and always over here was the greatest short within the upside volatility, but we went straight down. And over here during the summertime in May is when they get weak, and quarterly profits were coming down and contracting ahead of that, and it was a great long-term short. As far as the SOX goes, you can buy puts, calls, you can trade ETFs, you can do all kinds of trade management, you can short the leadership names that cause the index to go down. There are many variables to the semiconductor component, both the bear, the index, the weekly look. Generally this time of year, it's the perfect time always, because right over here, when you go back to 2010 date, right here, 9/5, that's when semis gained traction in their earnings model. And it was a great play back in September, where no one wanted to be long. We rode this thing all the way up. But September and the quarterly, Octoberly earnings, we have brought this all the way back down to these 2010 levels on a weekly, and we popped straight up. And when we did, during those 2 weeks, then markets were acting good to the leverage to the upside. And now we're pulling back to this whole area. That's going to be a major thing moving forward, because if semis aren't leading the way, and transports are going down, and commodities and energy are going down, well then the S&P is real weak because of it. But we're going to be gauging how to trade this right here, the 3x bear. If we continue this weekly reversal, which is week 1 to the previous week, then we're going to look at how this 3x has got support here, where we have, and this is a daily right here. So let's draw a trend line there. Here's the trend line. It'll go across here. There it is. Here's that support line. Okay. Here's its counterpartner right here. So let's get this up here. Now let's get the opposite as where this had put that in. Here's its resistance levels now. This one is the 3x bear. That's a support level. This one is the bull, the 3x bull. The 3x bull is at support, and the 3x bear is at resistance. And the weekly right here, this chart, is that we had a double week pop off of these bottoms right here. Here, I'll just move this over a little bit, because this is where the weekly reversal was to the low. This is the new bottom in the semis. And traditionally, semis do well this time of year. However, because of slower worldwide growth contraction around the world, and U.S. earnings versus international earnings, is we're trying to price in where semis can set up and rally during their strong period of the year, and that's the fall. And through, they usually like to go higher right up and through to February, and their business models is where they're selling lots of new things. The chips lead the world. Now, with worldwide growth being slower, we got to find the value in here, and this is the time of year, and we trade this many times. And when this was up here at 100, you can be buying the other side of that failure. So when you're rallying in the bull, your bear move is going down, and make money on that bear going down and make money on the bull going up. This is going to be a major movement that's going to happen in the SOX in the next 5-day period, and going into the calendar October season earnings as well. And we're all over this on a daily compounded level. Once again, 3x bull, once again 3x bear, once again weekly chart pattern over here. This was the top, this is the bottom, how to apply it, what side do I get weighted on between the public, what leads rallies higher, what leads rallies down, what is the history of the semiconductors, and why are they so important. And I will tell you, MMTs, right now, these are the stocks that trade. This is the SOX, and these are the names. Broadcom, we like it, okay? Always have. Nvidia is coming up. They're the ones that sparked that 5-day rally we had, not last week, the prior week. It was this company with its upside guidance. Look at SanDisk was doing well during that period. Texas Instruments already put its guidance in. Lam Research, they're holding right up in this area. You've got Cree, that's been a real loser. We were short that all of last year and all of this year to the bottoms, kind of like RIM's story. All right, you got IDCC in here. You got naturally the bellwether Intel, which is still up here. You know, KLAC 10 core, it's another great one. And we like Marvel at times. It's finally getting down to levels where there could be possible upside movement, but Broadcom is a great one. And Broadcom's forward-looking growth models and changing with the smartphone revolution, part of the smartphone, part of the new different kinds of things that are going to go involved in the chips that they make, is going to have another growth cycle, this company here. So those are the equities that are involved. I'm going to conclude how important the weekly, how important that support level is going that way, and how important that this resistance level going down is. Because if I'm going down and I break below these daily moving averages, I'm going to run up into these daily moving averages. This is the 3x bull comes up here and tests, and we come down and get support here. So there's directional trade movement.